Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively quiet session. Some key things that we wanted to go and take a look at, which is obviously the Canadian dollar. We are making a track to this key 3354 area here. This is an area that we thought the last time we'd make a run at, and it came up just a little bit short here, but very key area here. You can see going back here on 3354. That's also confluence in here with the 50% back. Takes us up to about 3368. And obviously just before the Bank of Canada. Now we did break, above this area here with a fantastic. We already covered that yesterday. Superlative defense of this key area here, this 31.36. If we lost that on a closing basis, it was just a hop, skip, and a jump to not only 30.43, but actually to be pushing even lower. So we really came back here, and crude oil had gone and pulled back, but it's still doing relatively well. So for the Canadian dollar to come off, it certainly did. Obviously the GDP had its impact, but boy, has it come back rather sprightly. We did kind of pare back a little bit yesterday a bit. We're reasserting ourselves ahead of the Bank of Canada meeting. Thought will be that they're just going to take it easy and probably allow this market to push much further. We're looking for a run really towards 34. I'm looking at this 34.18, and we could even blast beyond that, making me run a period of this 127% extension. Another market that obviously caught some attention actually from yesterday and was the gold market, and certainly we've seen that pullback here in the gold. Once again, we're looking at it on the daily, and we've now gone into a sell signal on the exponential moving average. You can see here that once we got this buy, it stayed fairly strong here. And one of the good signals that you'll see on these exponential moving averages is whenever you see like a dip here, so you've gone from a buy to a sell and you flip back to a buy, generally that's a pretty good signal going that direction, because what happens is as the market slips into a sell, everybody thinks, okay, now we're going to move lower. And so anybody that's stuck now has their stops, and we end up, clipping those people, and there's no follow through. So next thing you know, you got other people on the other side of the fence thinking, wow, this is a great time to get long, because look, we had a pull down here. There was no follow through. Let me go on and get long for here. I got low risk. I'll just put my stops below that. And anybody that did get short, well, they're thinking, oh my goodness, now the market's come back. So you end up generally seeing a fairly extended move. Not that kind of a move all the way up here, but generally you get a pretty good ride for a while. And certainly we saw that. So why I think that now it's significant now is as the mode has changed down to a sell mode. Maybe for some people might think, well, it's a little bit late in the tooth now, considering what we were before. But now what that tells you is that in any rallies back, the market will be looking to go on and fade back. And certainly the strength of the dollar and where we have been in rates has gone to support this downdraft here in the gold market. But we can still work lower. As I told you, I think the 38% doesn't even come in, and we'll take a look at that quickly. It's a quiet day, so we'll take just a quick overview on things before we jump into the news and the analysis. So 38% doesn't even come in until 1275. So that's what I'm saying. It looks like eventually we'll get there. Now we may get a bounce before then, but then rotate back lower, and we may eventually come down here to this 1267 as you finally get an area of some value buying. Certainly the S&P's hanging on, the equity's holding on, certainly has kept gold at bay. Speaking of which, let's take a look here at the cash dollar index. Now, what we've been using since last week has been our 2-hour to get a better gauge on this. And you can see here the market made it up to 96.82. Our bias chart resistance from yesterday was 96. Where we are here, 96.81. So that's us. And the key to me was this is where the real resistance was going to come in at 96.81. And so we just took it out by 1 pip. And you can see here we're just hanging around here, which correspondingly The euro's taking its own little drubbing here. We got even further here in the euro. If you look at that, we had 1324, but the market pushed even lower here to that key. Remember, this was a key area before, which was at 1309. You can see that coming across here. We'll kind of flush this out here. Remember how important that 1309 was. And so that's where exactly we ended up going down to. Now we had our support at 1324. We popped back up and we're kind of holding our own right here, but obviously for maybe good reason, because the dollar index is a bit stretched. Dollar peso has gone and pulled back. Here was that move we were looking to for 1929.99, 1929.9, and we made that run up here. This worked out very well here. Remember, we were looking, our resistance was at 1936.2, and we're looking potentially for a move up here to 1938. Well, actually, we made it right here to 1938. That corresponded with 1937.8 to 78% in 1930. Almost made it up to this level, and we since have pulled back a bit here. So let's take a look where we stand overall on the economic data for today, and then we'll go on and move on to the news, and then we'll get into the analysis. And it's very quiet trading in the sense of the range itself. We're not seeing all that much volatility. So for today, we did get Swiss inflation, Spanish PMI services, which came in a little bit stronger, so it may help the euro a little bit. They're looking for 54.10. We got 54.50. Italian PMI services came in at 50.40, also an improvement. So things might be starting to ease back a little bit as far as these concerns and worries. Also, the French PMI, look at this, 50.20. We're back above the contractionary mode here. And a nice rebound here in the German PMIs. Look at that, 55.30. So performing all the way across the board, not bad. Italy GDP did come in a bit weaker here at minus 0.10. And we did have Eurozone PMI services at 52.80. So just a little bit lower, but as I mentioned, still better than what was expected right here. Okay, so doing well. As we move into the States today, we do have building permits is going to be out at 8 a.m. Eastern. We also have, let's go and move on to PMI services here in the States at 9:45. And ISM, non-manufacturing, at 10 a.m. Eastern. Someone's asking about the Bank of Canada, and that's actually going to come in tomorrow on the 6th. And ahead of that, we'll have Canadian trade balance. Pretty quiet ahead of that. Look at that. And then Canadian, look at this. Oh, interesting. We'll have Canadian unemployment labor productivity rate and the Bank of Canada decision at 10 a.m. Eastern. That's tomorrow, coupled with IBPMI. So until then, and they thought that they're going to take it easy. We'll probably have the Canadian currency on the defensive. Certainly, God, depending on what the Bank of Canada does, this could maybe end up hitting this level. We'll see what happens. Let's go and take a look at the news. That's even very, very light. So we'll review that. And like I said, very low volatility. Dollar just hanging around these highs. We did make it up to 96.82, bias chart at 96.81. So we're right into that resistance. We're kind of hanging on, just staying relatively strong. So in the morning bid, do more and faster, Macron tells Europe. Setting out its pitch for the European Parliament elections in May, France's Emmanuel Macron last night unveiled a wide-ranging set of proposals for a post-Brexit Europe he hopes will entice voters away from the Eurosceptic parties, lining up to win seats in the poll. under the slogan of a Europe which protects. It includes measures that in some cases would become extremely tangible, an EU minimum wage, for example, EU-wide rules banning the hate speech and violence from the internet. Others would reshape Europe gradually, but no less profoundly. A common EU asylum policy and tougher protection of Europe's external borders. There's also a call for greater defense spending. Some critics may see it as a blueprint for more authoritarian fortress Europe. Macron's aim is to jolt Europe's leaders into accepting the rest of the world is a nasty place and that they have to do more to help and protect their citizens. PM Theresa May's top legal expert heads to Brussels today for talks this week to secure some kind of legally waterproof assurance that the Irish backstop arrangement will not leave Britain tied to the EU rules indefinitely. She hopes that will in turn persuade enough conservative lawmakers to back her deal in a fresh vote likely next week. If she cannot, then the exit date is almost certain to be delayed by lawmakers eager to avoid a potentially disorderly no-deal exit. On the economic front, final service sector PMI numbers for the region are expected to confirm that the activity in the Eurozone is broadly on hold. Well, actually, we're doing a little bit better than broadly on hold. British consumers, meanwhile, reined in their spending in the February ahead of Brexit, and shoppers focused on buying food, including for stockpiling rather than non-essential items, separate data showed. At a readout, Justin shows the growth in the Netherlands was so faster than expected to the 1.5%. Moving on to the markets. The mini shakeout in Wall Street on Monday reflected just how much the market is now fully priced in the U.S.-China trade deal, but just also how much global economic soundings continue underwhelmed despite the financial market ebullience in the year so far. Even though the S&P 500 regained some of the intraday losses by the close, it ended the day about 0.4% lower, ostensibly on poor construction data and a retreat in healthcare stocks. The latter was hit after Reuters reported that the OxyContin maker, Purdue Pharma, is exploring the filing for bankruptcy to address potentially significant liabilities from lawsuits alleging the company contributed to the opioid crisis. But the subpar global economic performance is getting some attention, with Citi's Economic Surprise Index under the G10 developed economies falling to its most negative since July 12 of 2012 on Monday. Service sector data out across the world on Tuesday will be watched closely for further signs of weakness, with China's Caixin series falling to a 4-month low, and Beijing cutting its annual economic growth target to between 6 and 6.5% from 6.5% previously. Shanghai stocks rallied, however, as the government outlined a debt fund series of tax cuts and spending hikes, lifting its annual budget deficit to 2.8 from 2.6, and Shanghai ended up almost 0.9%. Although the Hang Seng stock closed little change, the rest of Asia also took its cue from Wall Street, then China. In currency markets, the dollars climbed for the 5th straight day, brushing off U.S. President Trump's weekend broadside against the Federal Reserve. In an overtly strong dollar, your dollar was big mover on Monday and weakened to its lowest in almost a couple of weeks ahead of the European Central Bank's policy meeting on Thursday, where many expect the ECB to signal a further targeted liquidity boost via so-called TLTROs. The euro remained on the back foot on Tuesday, though off the Monday lows. More general volatility in the major currency markets has dissipated considerably since the Fed has outlined its patient pause in its rate rise campaign. And let's go on and move on. Euro and Canadian dollar fall before the central bank meetings. The euro fell towards a one-week low on Tuesday as the dollar gained broadly, and investors began pricing more caution from the European Central Bank at its meeting on Thursday. The ECB is facing growing pressure to address the question of how to protect the Eurozone economy from a protracted slowdown. The expectation is that the central bank will delay hiking interest rates until next year and soon relaunch long-term loans to banks that put pressure on the euro, which has fallen 1.2% against the dollar this year. Euro losses may be down to the fact that ECB's new projections on Thursday might paint a more subdued picture than before. Well, that may be true, but the PMI services is a little bit better improvement there. So the market may also be pricing in a slightly more cautious ECB, which is why the euro is already aiming to the 113 mark. The euro dipped to 113.18. Elsewhere, the Canadian dollar fell to its lowest in more than 5 weeks on expectations the central bank was approaching a policy turning point, and concerns grew over political scandal that has triggered cabinet resignations. Currency was down a quarter point as the U.S. dollar against the dollar after touching three-week lows on Monday. The Bank of Canada expected to hold steady on rates this week, and many reckon it could be edging towards a cut later in the year. The dollar stood close to a two-week high against its peers, shored by a resilient U.S. economy. The greenback enjoyed some support from higher U.S. Treasury yields, and recent data has eased fears of a potentially rapid loss in economic momentum. Well, price volatility has, for most world traded currencies, subsided recently as dovish shift by major central banks reversed a brief revival at the end of 2018. Volatility is crucial for traders who can wring out more profits when prices move wildly. But the euro-dollar exchange rate, the world's most traded currency pair, is stuck in its narrowest quarterly trading range since the euro's inception. Yes, it's been unbelievable, folks. And moving on to the dollar two-week high, it says the euro remained wobbly. And against the broadly firm greenback, the Australian dollar was down 0.2 to 70.77, canceling out modest gains made overnight on expectations of further easing of trade tensions. The Australian dollar sagged after Tuesday's Caixin Market China Purchasing Managers Index showed the services sector in the world's second largest economy easing to a 4-month low. Currency is sensitive to developments in China, Australia's main trading partner. The Aussie briefly ticked up after the RBA left the interest rates unchanged at 1.5%, as widely expected on Tuesday. Currency got some lift as the RBA refrained from taking an even more dovish stance. The focal point, however, is still on the potential easing by the RBA, and the Australian dollar remains on the defensive, said Masafumi Yamamoto, chief forex strategy at Mizuho Securities in Tokyo. The Australian dollar took a big hit last month after the RBA stepped back from its long-standing tightening bias, saying the next move in rates could as well be down as up with that. And lastly, we'll just touch gold because on a very quiet session. People are more comfortable in moving out of the safe haven assets as gold is coming under pressure from that, Jeffrey Halley says, concerning the dollar. A lot of money was parked in gold at the start of the year, waiting for the clarity on the tariffs. Now that we are seeing a little bit of optimism on the tariffs, that has undermined the pillars for buying gold. Secretary of State Mike Pompeo said on Monday he thought the United States and China were on the cusp of a deal to end the trade war. Global growth concerns are a long-term factor, and we'll see some support coming in for gold, said Renisha Chanani, head of commodity and currency research at Monarch. And that's about it, folks. So let's go and move into the analysis. One of the things we're looking about, and we said if we got a close below that 1363, we're looking for a move potentially going towards 1291. Well, we may get that going ahead of the ECB as we move towards that. So let's take a look. Although, like I said, the story said it all. We're in the lowest volatility. Get this, the lowest volatility for the euro dollar since the inception of the euro. That just tells you it's been tough sledding, folks. So as far as volatility, God, I can remember you used to get these fantastic swings. It used to be, I think, not that long ago, it used to be the average daily swing in the euro was like around probably about a little over 120 pips a day. Can you imagine that? 120 pips? I think even worst case used to be like around 118 pips. And you don't even know what even half of that move is. Seriously. But anyway, we had our support here at 1324 here in the euro. We did take that dip down to the 1309 area here. But we did say that if we got this close below 1360, you can see how last week we're just couldn't take out this 1392, and you can see the significance of 1360. Once we got above it, looked like it was blue skies ahead, but the euro faltered again. So we got that close below 1360. That points to move down to 1291, and that's what we're going to have our support for right now, 1291. Even though we got better PMIs, look how quickly we just kind of like paired back again. Couldn't get past this 1343, but the resistance comes in. It's going to be right there. 1350. 1350 will be resistance. And we know how important it is if we were to get a close above 1360. Well, the cables come back a bit here, and what we're looking at, I want to move into the 2-hour chart. Cables have stayed relatively strong when you think of what how strong the dollar is, and look how poor the euro's done. But I still think that this may work as a bit of a magnet. This 31.31 being the 38% and the 31.28 level. So we're going to go in, if the dollar were to push a little bit higher, maybe the cable comes in and cleans out some additional stops. We're going to go with 31.28. Still a ways down here, nearly 50 pips, but that is confluencing with 31.31, the 38% of this entire range. We may not see that. Maybe we see it maybe as early as tomorrow, but I think as long as the dollar stays relatively well bid. Our resistance, remember, yesterday was 96.81. We got to 96.82, but doesn't mean we can't push a little bit higher, and maybe the cable pairs back just a bit. We are in a sell mode here on a shorter term basis. I mean, 2-hour basis. You can see here after a pretty fabulous run here. So we'll go with 31.28. And resistance is going to come in right there, right here. 32.28. About 50 pips away. You think we can, but like I said, we may not see it maybe until tomorrow, but I think we could push lower, and I think this will work almost like a little bit of a magnet. It's going to be easy for, I wouldn't say easy, but I'm saying the pull to come down here, clean out the stops, and see what the market does once we get down there. Maybe a little bit of a reload. Overall, the cable still looks very good on a daily basis. In time, I think we'll eventually make a move, further move up in here. Well, the Australian dollar continues to stay relatively weak. And to me, it seems like it's only a matter of time we eventually get down here to 70.27. We have this marked off, and I don't see any reason to change that. You know, they got the little bit, well, not better news because the China cakes and came in weaker, but even when they get some type of news, we're not seeing much of a rally here. And look how tight this range is. Can you imagine? Look at this. I mean, this is, I don't want to say indicative, but, you know, we're talking about these tight ranges and unbelievable. Look at this. We are simply, these aren't 30-minute bars. These are 4-hour bars. And look at this. 11 pips. I mean, this was like on this big move here, 67, I'll call it 68. Unbelievable. 21 pips. And then just 10 pips, 10 pips. We're just not moving anywhere. So 71.18 is still going to still stay in check here with a bearish bent. Let's go move into the dollar Swiss. Well, we went back to our old bias chart, so a resistance level, which is par 21. And we haven't broken above it. Look at that significance of here, par 21. Market is staying relatively quiet, but at least it's bidding a bit higher here. We're just going to stay with this par 21. I think we can actually push a little bit higher today, so we may have to go and move that. If you look on the 2-hour chart, how much further can we push? Maybe some stops. That would take us, let's take a look at this. Let's go with it. That's not even saying much. Look at that. But we'll go with par 33 to hit some stops. Resistance is going to be right there, 99. I think we had marked as 99.79. Well, 99.78. And let's move on to a more interesting pair, which is going to be the dollar CAD. You can see here the 50% comes in at 33.68. And we're going to go and use that as our bias chart resistance. With the exception, I mean, with the Canadian dollar, we're just not seeing just a whole lot of movement across some of these FX pairs, which is goes without saying. Let's go and move into our 2-hour chart to find our bias chart support. And this has stayed relatively well bid. We had 33.26, and you can see here we saw a bit of a pause back. We pulled back about 25 pips. But to be quite honest with you, the way that FX has been trading, 25 pips is nothing to sneeze at. But we did, got above it, and we paired back, and here we are reasserting ourselves. That 33.54 is a pretty good solid level, but I think they may be able to go and stretch out to 33.68. Maybe the market eases back a little bit ahead of Bank of Canada, but most expect the Bank of Canada to not be asserting any type of strength of economy, so which will allow this to push up in all likelihood just above the 34 level. Support then is going to come in right there at 133. Well, actually, we'll call it 33.02 right there. It's not giving much opportunity to jump back on the train. I know that Joe was looking at that to jump back in. And Iris made the similar, they were both talking about that yesterday late in the chat room. So let's go and move into the dollar peso. Well, yesterday we were looking for a move. Let's pull this back. We were looking for a move. Remember, our bias chart resistance right here was 1936, 19.362. We're looking for potentially a move up here to this 1938, between 37.8 and 38 here. We got up as high as right there, 1938.2, so not bad. But our resistance was here at 1936.2. We got there and we've rotated lower and we pulled back right into this 23%, just a little bit lower because 23% is 19.299. Let's go and take a look at on the 2-hour. We're going to have to do a little bit more work here, and that's what we're looking for support here. 19,259 for today. See, you got a good volume coming in here, so I think that this, after a very nice run, this makes sense to come down here and challenge into this area here. May even overshoot it a bit, but I think that's a very good area here. Now, as far as resistance, it's going to be right there. 1932,489. 1932,489. At least initially speaking. call it right there, 1932.5. Let's go and move into crude oil. Crude oil is still hanging on rather well. Yesterday we had our resistance at 56.48, and it popped up here, got up as high as what, 56.77 before pulling back. It did pull down to what, 55, actually from that low down to 55.72. But we're trapped in this range, or staying very, very tight. And I'm surprised we haven't tried to rotate a little bit lower as we've hung around here. We did go and see this thing pair back. Resistance is still going to remain this 56.48. That's going to be the resistance. Support just don't see if we're going to go and get this to rotate a little bit lower. And I think that's open to that. But with equity still staying firm, it's basically providing a nice little undertone bid for this crude. But boy, look how tight this is. You would think this was maybe a 5-minute chart. This is a 2-hour chart. And look at this. I mean, there's just no volatility. Look how tight that thing's trading. So for the short haul, it's going to be right there, 55.18. And let's move into the dollar yen. This is another market that looks like it has a date with destiny, or a date with a price line here. And when we look here on the dollar yen, this market wants to move up to 1243/1279. 1279 is a good level in here, but you can see right here some additional right there coming at 1269. That's also in the confluence here with this downtrend line. So I think we're going to get a move into the 1260. So we'll probably go even beyond that, take out 1250. Well, in our resistance, we've had 1243, and we'll keep it there. But boy, this market really looks like it wants to take out those stops above 1250. We'll keep this 1243, which is a 78%, but some nice confluence here between 43 to 79 to the downtrend, which makes me think that we'll probably make a move somewhere into the 1260s before we get a more effective pause. But we'll keep the 1243 as our bias chart resistance. And 1144 still holding. One of the I don't say keys, but yesterday when we were seeing the S&Ps come down, initially the dollar yen reacted, but then it just, initially it just pulled back, and then it just hung around this area right here. You can see that, the 1163 area here. Here we are pushing right back up again. If we were to lose some strength, it'd be that 1144, but this market's holding up rather smartly, so we'll move this up to 1163 for right now on a short-term basis. So we'll call it 64. Let's move into the Aussie Yen, which I can imagine not a whole lot of movement there, and for good reason. So I hate to say it, but it looks like nothing's changed. And I still think we'll eventually break down here beyond the 79.10 and make a move to the 78.87. But boy, are we stuck in a rut for right now. Now we had our resistance from yesterday, and I don't see any reason to change that, which is 79.39. We're just about there. You can see that coming across. Can we make a trek up to 79.56, which isn't that much higher? Possibly so, but we'll stick with where we're at right now. Obviously, if the yen weakens, we certainly can make that push here, and the yen is certainly, at least against the dollar, trying to push these stops up here at 12. So maybe we do go and push this up higher. So let's go and move this back up here. I think we need to, with the way the yen is staying fairly weak. Move this up to 79.56. I think we're going to go down to 78.87. I do want to go and keep this in here as our support here, an area that I believe the market wants to get to. Do have an uptrend line here, but I think they'll coincide with the 78.87. Boy, is these markets dead. With that, we'll move into the cash dollar index. Well, as I told you, we've been looking at the 2-hour chart from all of last week as a guide to what we thought would happen. We've made this trek up here. We had 96.81 as our resistance from yesterday. We got up as high as 96.82. But the market may want to stick around here. Tomorrow we have Bank of Canada. Euro is still relatively weak. We may end up eventually pushing up here to 96.92. That may not happen until tomorrow, but I think that we have to move this because this is a very, very key level here, and looks like that's where the market want to move or try and challenge. Doesn't mean necessarily it'll get above it, and it very well may, especially with the yen staying weaker and if the KO pulls in a bit. But that would be the resistance right now in a huge area here, 96.92. Support now comes in just a hair below, 96.41. As I mentioned, this 96.81 was key, but you have to think in the sense that the euro continues to remain weak. Most people believe that it's going to stay weak with potential announcements of TLTRs by the ECB. Then you've got Bank of Canada. That's tomorrow. They expect them to go on and keep it, lay low. Then you've got the yen weakening. So I don't mean to suggest it's a set of self-fulfilling outlook, but it's almost like that. It's almost has no choice but to go up. And obviously it's the worst time. Sometimes we think a market's going to go down, but if you think about it, one of the concerns with the U.S. economy is okay, we got that recession just around the corner, and we're still not seeing it yet. I mean, the only thing that's going to pull this dollar down and really not pull it down there's going to be some concerns for for doubt is if we see a surprise in the NFP, because that's one of the reasons why yields have come back, also helping also the dollar yen, because that's starting to pare back as far as is concerned about, we're just going to fall into a recession, and so far we're not seeing it at this point. Doesn't mean eventually it won't happen, but for right now, that's the way the market's viewing it. Let's go and move into the gold market. Well, we've already made the move down here. We're looking for 1280 for support. And we already talked about this. 1275 is going to be the 38%. And that's what we're going to have to go and move our bias chart support to. It's just below the support here, 1280, but I think the market's going to want to make a beeline. And if the dollar continues to strengthen, because like I said, the euro with the ECB potentially is going to go on weekend lower. I mean, if you're bullish the euro, and I mean straight, bullish, but if you're thinking, well, I think the euro's overdone, I think that we can eventually make a move back up to 114. It wouldn't make any sense to say, you know what, I guess I'm going to get long ahead of the ECB. If you were saying, I think it's all overdone, I'll get long after the ECB. So my point being is that the euro is going to potentially stay weak and eventually move lower, which is going to push the dollar index. The dollar yen is just biting at the chomp to take out 112 with some significance here. So that'll allow this gold to go and pull back. So we're going to go with 1275, which is a 38%. As our support. And looking at resistance on the 2-hour chart, boys, it's been down, 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 down. Resistance comes in right there, 1293. And they may even have a tough time even get beyond that. But if we were to get beyond, that would be the key resistance, which was support on the way down, remember? 1293. That was our initial target, remember, from over a week and a half ago. Because we kept saying, be careful, be careful. This thing's going to go and slide and should make a move down to 1293. And that's what we came up with the there was the 1293. Moving on to the bunds. We had 64.95, and I think on the upside, that was what, 65.50. So we did make a trek just above 65.50 and paired back just a bit. There's a 65.50, got just above it. Now we've broken right back below. That's going to continue to remain the resistance, 65.50, with support coming in right there. 65.20. Actually, we did make a run right there. You see that 65 right here, 65.20, and we made the run to 20. For right now, we'll just go with that support, and actually just hit it already, 65.20 for support on a very short-term basis. And let's go and move into the DAX. We had 11,538 as our support, and yesterday we got down to, or into today we got to 11,527. So not bad, although we're trading in a relatively tight range. Not bad. We had 538 and got to 527. Well, it looks like they want to go and try and challenge this upside again. I'm not so sure how much we can go beyond this. We're going to keep it relatively tight, thinking they can't. Let's go and move this to a 30-minute. You're right, that's 61%. And that's what I'm saying right here is what I like right there. 11,636 for resistance. And I'm not even, as I was saying, I'm not even sure it'll make it up there. I'm more inclined to think we'll start to slide back, and that would be 11,506. Certainly, there's nothing to suggest at this point that we're going to make that drop, but for them to target, it would be 11,506 if we get that break. Okay, there's the bias chart for today. Seeing the euro continue to weaken back a bit here ahead of the ECB. And I'll get this posted. And thanks for joining us here on the European Crossover Webinar.